In this update, I will be reviewing what's happened in the property market in November, following on from the budget and comparing it to the November market of recent years. As well as the budget, we have also had a base rate drop, inflation rising, and Donald Trump being re-elected. So there's lots to digest, and I'll be doing my best to review what it means for the property market going forward. You would expect all the recent events to be creating stormy conditions for the property market, in a similar way that Storm Dara has across the UK recently. However, the opposite could be said with the number of properties for sale, new listings, and sales agreed all up on November last year, and the same period over the 6-year average for November. Average asking prices pound per square foot have both increased for new properties entering the market and sales being agreed compared to November last year. Plus, mortgage approvals and transactions are on the up. Mortgage approvals were up 42.59% in October compared to last year. That's 4.12% higher than the previous month of September, the highest they had been since August 2022, and have increased 5 months in a row. Transactions were up 21% on October last year, 10% higher than the previous month of September, and that's 3.25% up on the 10-year average, the highest they have been since August 2022, and also the first time they have exceeded 100,000 in 1 month since then. So, supply is up, demand is up, and prices are up, all compared to a year ago. It would appear that the budget has not dented confidence or activity in the property market, and things are looking very bright as we head into 2025. The past 10 years has seen us in a state of permacrisis, which means a long period of great difficulty, confusion, or suffering that seems to have no end. I think this sums up the political and economic climate for the best part of a decade now, and yet the UK property market is still standing as the public have seemed to have got used to this now. This determination to get moved is evidenced by the fact we are on course for 1.1 million transactions in 2024. That's a 10% increase on 2023, and 1.15 million transactions in 2025, which is just 50,000 shy. However, we must not get carried away, as despite these strong results, the market still has affordability constraints, more competition between sellers, and sticky inflation. Whilst there are plenty of positives to report on, price adjustments and fall-throughs continue to be an issue, with both higher than the same period last year and the 6-year average. This will be costing those moving home lots of wasted time and considerable amount of money as well. I've spoken previously about strategies that can help reduce both of these happening, so please do reach out to me if you want to discuss this further. The number of properties for sale, new listings, and sales agreed, plus average asking prices, all went down in November when compared to the previous month of October. Whilst this is a typical seasonal trend towards the end of the year, it also highlights that we must not forget how price sensitive the current market is, and that competition between sellers is at a 10-year high, partly down to landlords looking to exit the market due to the challenges around interest rates, tax, and legislation. According to Rightmove, the 1.4% monthly asking price decrease was larger than the usual November drop of 0.8%, likely due to pre- and post-budget jitters. You could also argue that sellers are adjusting their expectations and becoming more realistic with their pricing. This can be evidenced by fewer properties withdrawing from the market, and sellers remaining more committed to the process as opposed to just coming off the market altogether if they don't get the price they were initially wanting. There are also a higher number of sellers returning to the market who have previously tried selling their property compared to last year. And this, again, highlights the increased desire to move. As you can see from this image, produced by Rightmove, there is definitely still pent-up demand from people wanting to move. These sellers might also appreciate that there is going to be increased demand from buyers looking to take advantage of the current stamp duty thresholds in the short term before it expires at the end of March 2025. And these same sellers might also be hoping to secure a lower stamp duty payment for their onward purchase. According to Rightmove, it is currently taking an average of 5 months, so 151 days, to complete a property transaction after agreeing a sale. So would-be movers, agents, and all those involved in the transaction need to be working hard and acting fast to stand any chance of completing before the stamp duty deadline at the end of March 2025. Property Mark, who we're members of, also highlighted in their latest insights report that approximately 30% of their member agents are indicating it is taking an average of 17 weeks or more to progress the sale from acceptance to exchange of contracts. The chances of a sale agreed in December reaching completion before next April is now close to a flip of a coin based on all of the evidence we have. Research from Hamptons highlights historic data that suggests around 71% of all sales agreed in November should complete before April next year. However, sales that are part of chains or where management companies are involved, so leasehold, are now very likely to incur higher stamp duty bills. Only 55% of flat purchases are predicted to complete before the stamp duty deadline, as the average flat takes 39 days longer to reach completion compared to a house. Historically, just 37% of purchases agreed in January will go on to complete by April, and this will tend to be cash buyers where there is no chain involved. These sellers might also be hoping to achieve closer to their asking prices, as buyers will be faced with the higher purchase costs from the increased stamp duty payments and will want this reflected on the purchase price. As you will see from this graph, improved market conditions, lower interest rates, pent-up demand being released, and more realistic pricing has meant sellers are now achieving closer to their original asking prices compared to the previous couple of years, as it returns to a more normal pre-pandemic average. However, as mentioned above, more choice for buyers, steadying mortgage rates, and higher stamp duty bills could see the percentage original asking price achieved reduce as we head into 2025. And cost-conscious buyers look for discounts as affordability continues to be stretched. Speaking of heading into 2025, it should be a very busy months as we aim to beat the stamp duty deadline, and sales pipelines being carried over are significantly higher compared to a year ago. Income growth has been stronger than expected in 2024, and the latest data from OBR shows that the disposable income has increased by 15% over the past 2 years, and Nationwide have also reported household balance sheets are also in good shape, with debt levels at their lowest levels relative to household income since the mid-2000s. This stronger income growth has repaired housing affordability, but in contrast, the purchase price and size of mortgage have declined for existing owners as they adjust to higher borrowing costs. Therefore, sellers need to appreciate that buyers are adjusting their budget downwards due to their purchasing power not going as far, and only those that price sensibly are secure in a sale. So what about mortgage rates? We have seen the base rate come down twice in 24, from 5.25% to 4.75%, and mortgage rates for buyers have fallen by 1% in the last year. Rightmove figures currently report that the average 2-year fixed rate to be 5.08% and the 5-year fixed rate as 4.85%. Their figures also highlight the lowest 2-year fixed rate to be 4.22%. and the 5-year fixed rate of 4.10%. The MPC will meet once again on the 19th of December to discuss the base rates, but it is widely reported that they will vote to pause on this occasion. But headlines this week have suggested the possibility of 4 reductions in 2025. That would bring the base rate down to around 3.75%. This aligns with previous reports that predict quarterly drops to the base rate as the course of the market reflects the uncertain inflation outlook. Mortgage rates have increased slightly in the wake of the autumn budget, and the predictions are that they remain unchanged throughout 2025, as the markets have already factored in future drops to the base rate. It has been widely reported that lenders will innovate on how they address affordability for those taking out fixed rate mortgages, and whilst lower mortgage rates are not expected, this will help to support buying power and market activity through 2025 and 2026 without borrowing costs coming down further. Boxing Day bounce or Boxing Day sales. At this time of the year, nothing divides a nation or estate agents on whether Die Hard is a Christmas film. It 100% is. Or if launching a property on Boxing Day actually benefits the seller or not. So, I reviewed the stats for the last 5 years on properties listed between Christmas Day and New Year's Day and found that approximately 42% of the alerts going out on Rightmove were for properties that had reduced their asking price. Therefore, I am of the opinion that it is very much the Boxing Day sales, and if I was a seller wanted to list my property on the market, I would not want to be doing so when all other sellers around me are reducing their asking prices. Rightmove reports an 82% increase in visits to their website on Boxing Day versus Christmas Day. But as you will see from the image, traffic to Rightmove unsurprisingly drops in the few days prior to Christmas Day and then reverts back to the usual traffic seen in early December. However, as you can see from the graph, there is a 69% increase in visits to Rightmove in the second week of January versus the first week of December. Zoopla also reported that January was the busiest month for traffic in 2024, followed by February and March. Rightmove have previously said that the best months to sell a property are February and March, with February being the month in which properties sell the fastest and the highest percentage of properties reaching a sale agreed, whilst March is also a strong month to sell a home with the highest number of buyers inquiring about properties. February listings are also most likely to go and finalise the completion of sale and the least likely to be withdrawn by the owner from the market. The data highlights that those getting ready to sell at the start of spring are putting themselves in the best position to get moving in 2025. So my conclusion, the best and most common words I continue to use when describing the property market over the last 2 years is resilient. Wage growth, lower inflation, cheaper mortgages and more choice have kept the market alive and helped to see a recovery in 2024 that have seen house prices surpass the heights of the late 2022 and activity levels increase to almost long-term averages. This is expected to continue as we enter 2025, but incomes need to continue to rise faster than prices to help reset affordability and allow more households the budget to enter the market. First-time buyers will also be very important to the market as they will remain the largest buyer group, thus supporting housing chains and helping existing owners to move. The price sensitivity in the market will not be going anywhere anytime soon, as the market is mostly made up of needs-based buyers as opposed to aspirational buyers we saw when the interest rates record low.